Tesla is still incredibly affordable. There are no other mega cap road stocks that trade at my estimate of 40 times earnings with volume growth of 30 to 35%, and that trend will not change. The adoption of EVs is skyrocketing. In California, it is currently 177%. China accounts for 22%. The greatest method to profit from the rising EV usage is through Tesla. Furthermore, I believe that there are a lot of catalysts in store for the next few months, including Investor Day, a blockbuster first quarter, Cybertruck, an FSD single stack product that will enhance that, and megapacks. This reminds me a lot of the end of 2019 when we were anticipating 2020 due to all the developments in the financial and electric vehicle industries. There are times when the market is rocked. This moment goes with those moments. Giant of finance with visions that could change Tesla's and other industries' course. His knowledge bombs have the power to change the path of history. And now, piece by thrilling piece, we are able to solve the mystery. This isn't your typical news about stocks. This is a revelation that will make you reevaluate your viewpoint, stimulate your curiosity, and pique your creativity. Keep checking back as we explore the facts, figures, and prospects for Tesla, electric cars, and the financial industry as a whole. The investing world is about to be rocked by the message Gary Black has to share. Are you prepared? Gary Black, a financial wizard, has made a groundbreaking discovery that might drastically alter Tesla and the electric vehicle market. Come along as we interpret his observations, solve the puzzle, and consider the implications for both enthusiasts and investors. A voyage that will provoke thought and spark the imagination is coming up. Stay tuned. This is not your typical stock news. Rather, it's a discovery with the potential to alter human history. Please remember to like and subscribe to our channel first, though. You won't want to miss this news event about Tesla shares. Now let's get going. The market for electric vehicles is getting more and more competitive. A lot of electric vehicle manufacturers are having to deal with increased competition that is steadily hurting their market share. It's possible that some of these businesses will be totally eliminated from the EV market in the not-too-distant future. At $32,000 after a rebate, Tesla's Model 3 is currently more affordable than the average cost of a car with a traditional internal combustion engine in the US. But Elon Musk's audacious goal to release a $25,000 Tesla model in the next 2 to 3 years would shift the game and speed up EV manufacturing considerably. Let's focus on a growing earnings warning regarding Ford in the meanwhile. The company's shares have suffered since its revenue and profit figures didn't live up to expectations. The CEO of Ford, Jim Farley, has been underlining the company's continued commitment to giving hybrid cars priority despite the declining demand for electric vehicles in the US. It's important to note that Ford again failed to meet its goals for profit and revenue in the third quarter. Along with the effects of the UAW strike, one of the contributing factors is the ongoing issue of warranty expenses, which presents difficulties for the business. As the top American EV manufacturer at the moment, Tesla is expected to maintain this position in spite of the difficult market conditions. A lot of other EV manufacturers are finding it difficult to compete with Tesla since it has been increasing its fleet of EVs and increasing manufacturing. A few of these businesses are even thinking about dropping out of the competition entirely. Today, we'll examine the reasons behind the revisions made by other automakers to their estimates of EV sales, as well as any possible ramifications for Tesla's shares. There are concerns regarding Tesla's classification when assessing its stock. Is it a tech firm or an auto company first and foremost? With Tesla predicted to generate $100 billion in revenue and rising at an impressive rate of 4% per year, a six-fold revenue multiple seems reasonable. Additionally, Tesla continues to turn a profit and maintains a competitive advantage in manufacturing and over-the-air software capabilities, areas in which other businesses find it difficult to match its expertise. Whether Chinese manufacturers can threaten Tesla's dominance with their cost-effective battery technology and manufacturing procedures is the main question. Because of its environmental friendliness, cutting-edge technology, and government incentives, electric vehicles, EVs, are becoming more and more popular among consumers. This is especially true in light of Tesla's industry-leading production facilities and quick over-the-air software updates. But not every massive automaker is having the same amount of success in the EV space. Notable companies like Ford, GM, and Toyota have recently updated their estimates for EV sales. What factors, then, led these automakers to decide to reduce their forecasts for EV sales? The global shortage of semiconductors is one of the main reasons why some automakers have revised their EV sales predictions below. Wide-ranging effects of this scarcity include a disruption in the supply and manufacturing of vital parts for electric vehicles. Fit Solutions claims that the shortage of chips has significantly impacted the growth of EV sales in 2022, hence harming a large number of firms. For example, a well-known company in the auto business, Toyota, was forced to significantly modify their estimate for electric vehicle sales. The corporation has cut its initial estimate from 202,000 to 123,000 units, an almost 40% reduction. The difficulties encountered in the Chinese market, where the scarcity of semiconductors has intensified the already intense price rivalry, are reflected in this notable decline. In spite of these difficulties, Toyota expects the fiscal year to see strong overall growth. However, the corporation is deliberately refocusing its attention on hybrid vehicles in response to the chip shortage and increased pricing rivalry in the EV industry. By making this calculated strategic change, Toyota is still able to reach its total sales goals while reducing some of the risks and difficulties brought on by the lack of semiconductors. However, even though the business projects sales of over 9.6 million cars in this fiscal year, EV sales will represent a smaller portion of its total portfolio. Fundamentally, the worldwide scarcity of semiconductors has compelled automakers, such as Toyota, to reassess their forecasts for electric vehicle sales and implement substitute tactics to maneuver through these difficult market circumstances. This could have a significant influence on the EV terrain and possibly reinforce Tesla's standing as a leading player in the sector. One other important aspect that is causing several automakers to reevaluate their estimates for electric vehicle sales is the extensive delivery delays brought on by the ongoing epidemic. These delays have had two effects. They have raised the risk of shipping autos across different parts of the world, in addition to driving up shipping costs. Consequently, a number of significant industry participants have been forced to undertake tactical changes. For example, Ford's ambitious aim of reaching 600,000 EV production units has been delayed by 1 year due to deferred EV manufacturing investments totaling nearly $12 billion. In a similar vein, General Motors has chosen to delay the release of several EV vehicles in order to protect its pricing policies. It's important to understand that, aside from Tesla, the majority of other EV manufacturers are dealing with the fallout from declining prices in the face of these logistical obstacles. For example, Ford recently retracted their prediction for full-year results, citing ongoing strain on electric automobiles. Remarkably, the corporation lost an estimated $36,000 for every one of the 36,000 EVs it sent to dealers during the third quarter, more than the $3,235 losses per EV sustained during the previous quarter. CEO Jim Farley revealed this strategic shift during Ford's July second quarter earnings briefing. He said the company plans to slow the growth of financially unprofitable EVs while refocusing resources on the commercial vehicle market and increasing sales of gas-electric hybrids over the next 5 years. The restricted capacity for producing batteries, a crucial element that greatly affects the availability and affordability of EVs, is a third factor influencing the modification of the sales prediction for EVs. Due to a shortage of batteries and rising raw material costs, battery manufacturers like Panasonic and LG Energy Solution have issued warnings about an imminent downturn in the electric vehicle market. As a result of these battery-related issues, some automakers, including Honda, have given up on their aspirations to work with partners like GM to build affordable EVs. Why does Tesla care about any of this, then? Given that a number of automakers are lowering their expectations for EV sales, Tesla has a great chance to increase its market share and solidify its position as the industry leader in EVs. Tesla has proven its tenacity by coming up with creative tactics and methods to deal with the difficulties posed by its rivals. To lessen the impact of the chip scarcity on production, the corporation, for instance, has proactively sourced alternative chips and modified its software. Additionally, Tesla has streamlined shipping operations, cut costs, and accelerated vehicle deliveries to customers by utilizing its global network of suppliers and manufacturers, in addition to its direct sales approach. Tesla has strengthened its competitive edge through its proactive strategy to securing its battery supply and cutting costs through strategic relationships with battery suppliers like Panasonic and CATL, as well as in-house technology development. In the first half of 2023, Tesla sold over 57,000 battery electric vehicles, setting records and accounting for more than half of all BEV sales in the US. As a result, the company has continued to develop and perform well in the EV market. In spite of fierce competition, the corporation has also grown its market share in important areas including China and Europe. However, Tesla's accomplishments go beyond American boundaries. The business has advanced significantly worldwide, especially in important areas like China and Europe. Despite intense rivalry from domestic and international competitors, Tesla has succeeded in securing a growing market share. Tesla has established itself as a major competitor in the fiercely competitive and diverse Chinese auto market. Thanks to its amazing products, cutting-edge technology, and steadfast dedication to client happiness, the business has achieved incredible success. This has proven that Tesla can adapt to and thrive in a variety of difficult market situations, solidifying its position as a dominant player in the Chinese EV industry. In a similar vein, Tesla has succeeded in Europe, where national automotive customs and tastes differ by combining cutting-edge technologies, sustainability, and performance. European consumers have taken a shine to Tesla, showing them loyalty and interest. Consequently, the company's market share is increasing, solidifying its worldwide presence. Tesla's success is a monument to creativity, tenacity, and an unwavering quest of perfection, rather than merely a matter of statistics. It is a reflection of the extraordinary transition occurring in the automotive industry, as well as the broader shift in consumer consciousness towards sustainable mobility. Tesla has demonstrated its versatility and dedication to reinventing what is possible in the world of electric vehicles by being able to not only survive but grow in the face of these hurdles. Rival manufacturers unintentionally boost Tesla's reputation and brand value in the EV industry by lowering their EV sales projections. By taking this calculated risk, Tesla is able to close the gap with its rivals and take advantage of the rising demand for EVs among consumers. Tesla can increase its market share by utilizing its production quality, design, performance, and customer satisfaction, while other firms continue to lower their projections and produce fewer EVs. In conclusion, as other automakers reduce their estimates for EV sales, Tesla stands to gain a great deal from their actions. Tesla can strengthen its position as the leading player in the EV market by taking advantage of the competition and utilizing its advantages. Here it is, the changing dynamics of the electric vehicle market, including worldwide shortages of semiconductors, shipping delays caused by pandemics, and restricted capacity for battery manufacture, have forced multiple automakers to lower their estimates for EV sales. Despite the fact that many participants in the industry have been impacted by these difficulties, Tesla stands out as a strong and creative force ready to take advantage of the shifting market conditions. We'd love to hear your opinions as we come to an end to this discussion. How else can Tesla, in your opinion, take use of this chance to solidify its leadership in the EV market? How much do you think Tesla's stock is worth, and do you think its price will keep rising? Make sure you like this video and subscribe to Tesla Stock News for more updates on Tesla and the always changing world of electric automobiles. We appreciate you being here today, and we hope to see you in the upcoming video.